Our next guest sold her Starbucks position, locking in 2-year gains, and added 2 new names to the portfolio, Elanco Animal Health and CDW. Joining us now is Stephanie Link, Chief Investment Strategist at Hightower, and, of course, a beloved CNBC contributor. Stephanie, good morning.
Good morning.
So tell us about Elanco Animal Health. What's attractive about it? How do you see their strength right now in this economy?
Yeah, I think it's a pretty defensive pick in this kind of economy. The total addressable market for animal health is about $59 billion with a CAGR of about 10% per year between now and 2030. And these guys, if you remember, they were a spin-out from Eli Lilly back in 2018, and the spin-out price was $24. The stock today is $11.85, so it's not been a good one post the spin. But I do think spins work. And a lot of that is because you can focus 100% on the spin-out after the spun company, right? And you have 100% attention in terms of the operations, in terms of growth, in terms of cost cutting and that sort of thing. They have a very strong pipeline. They have got 5 products that are coming out in the first half of 2024, and that's going to yield $500 million in incremental total revenue by 2027. So you have a company that's growing at about 8% in total revenues, 3 to 4% pricing power, and EBIT growth of about 20%. And they do also have synergies from the acquisition of Bayer. So I think at 14 times for a company that's really underperformed but is about to see a product cycle, I think it's pretty attractive.
Yeah, I mean, it's down 67% over the past 5 years. Is this effectively a bet on the pet market? We've seen some weak results recently from, I think, Petco, and basically, you know, that boom we saw in pet care, pet spending during the pandemic has normalized. Is that will that be a problem for this stock?
Well, I think we've seen over the last couple of years that pets are living longer, and actually pets are undernourished. And so I think that there is this total addressable market, this tailwind from that. And I think the industry leaders really, I love Zoetis, by the way. Zoetis, though, trades at 34 times earnings versus Elanco at 14. So I think the two of them are the industry leaders. And again, I kind of look at the product pipeline. That's the most important. And they have some blockbuster drugs. Both companies do.
All right, let's talk about your next pick, CDW. What do you like?
Yeah, so it's a value-added reseller with a total addressable market of about $1 trillion. They've got a very diversified customer base, enterprises and small, medium businesses, government, and that sort of thing. They are also changing their mix to more software and services, which should help on the margin side. But 30% of their business is about PCs, and that has really been in the doldrums. But if you listen to what AMD and Intel had to say last quarter, they actually saw a sequential improvement in PCs. So we get rid of the glut, if you will, the extra inventory. And I think that's going to be the story for the second half of this year and into next year. And so when you kind of step back, it's a high single-digit total revenue growth, low double-digit earnings growth, gross margin expansion, and ROIC of about 20% with strong free cash flow. And so I like this story. It's sort of off the beaten path, if you will, and I like that within technology.
Yeah, it's interesting. And so just quickly back to Starbucks. I know you sold it because you had a big gain there. Are you concerned about their strength given this economy, or what is it that makes you think there's not a lot of upside going through the rest of this year or next?
And I love the story, and I will totally buy it back if it were to pull back. But I am up about 57% since I bought it, so I thought it was prudent to take gains. I do worry a little bit about the price point and traffic as a result. So it's a great company, size and scale. I love their international opportunities. I still believe very much in the consumer piece of China reopening. That will help them. But I do think at this valuation, it's really expensive. And so I'm just going to take the gains and wait for a better opportunity. And by the way, I took some of those gains and I continue to add to energy. I mean, in the last month, energy has outperformed technology by 770 basis points. And I've been owning Chevron, Schlumberger, and Fang in Diamondback Energy. Chevron is the one I've been adding to because it's still down about 12%, and it trades at about 11 times forward estimates. So I think there's more opportunity elsewhere as the market broadens out.